Hey, San Antonio. When it comes to buying a house, there's some myths that are involved with what do we have to do, how do we get pre-qualified, and today we're going to touch on some of those. I'm Raul Jimenez with the Schrader Group, and I'm blessed to have Jon Tober here. What are some of those myths that people always say, like, oh, I gotta have 100% credit and I gotta put 30, 40% down? I mean, what's the reality of how do we get first-time home buyers or even home buyers that have been sitting on the sidelines just ready to go, but they've just heard these ideas that they just gotta have a whole bunch of money?
Yes, yeah. You know, before we dive into that, I do want to address one thing. Great job. I mean, you've been doing this for about a year now, creating some great content for your clients and your followers, and it's not easy to do. So it's a great job. I just want to...
Well, I appreciate that. And that's the whole thing. We're just trying to add value so that you guys can have a reputable source to get the ideas of what you need and answer the questions that you've been wondering about. I mean, we're all thinking about it. So talk to me. What are we looking at? What are the myths that we got to go through?
Yes. Okay, so the top myths that we're looking at is, you touched on down payment. So 20% down is a general rule of thumb that we tend to see come in.
Right.
But it's really not the case. When you buy a home, the most important thing is budget. So if you can purchase the property with less than 20% down, let's say 10% down, and it's within budget, use those other proceeds in a growth account. Like, allow that money to grow with you. Because the purchasing of a property, the increase of value is based on the value of that property over time, not the money that you put into it. So 20% down, mortgage insurance used to be the main kicker for 20% down.
Right.
And nowadays, mortgage insurance is much more attractive than it was before. It's nowhere near as costly. Especially for conventional loans.
Sure.
So 20% down, that would be the first one. The second one would be you need perfect credit.
Yeah. I've heard that plenty of times. Like, oh, I don't know, I got a ding on my credit 9 years ago. Well, that's probably already off the record, right?
Yeah, exactly. And waiting until you have everything perfect is just not the answer. Mm-hmm. Because, as an agent, if someone's waiting for 6 months to a year to just build that credit score up, what happens in that period of time?
Right. Life, anything can happen, right? It's one of those things I always tell my clients, regardless of whatever it is, we're solution solvers, right?
Exactly.
Let's figure out what we look at on paper and we'll figure out a game plan, or you're already ready to go. But if we don't scratch the surface, we'll never know. So we talk about VA a lot here in San Antonio. We have, Military City, USA. We have close to 100,000 vets that live here in San Antonio. Yeah. What my entitlement means, or how can I get in a house, zero down, all those kind of things. Will you touch a little bit on those programs?
Yeah, absolutely. So we love serving our veterans. I mean, it served our country, so being able to offer a VA loan is a really big deal. Mm-hmm. It's one of the best ways to buy. There's no down payment, and there's also some programs that can be tied in with a VA loan that most veterans aren't aware of, that offer discounted mortgage rates, along with other advantages that help out in that financial benefit. So VA is a great way. Other options and opportunities are, depending on the goal. So if it's minimal out of pocket, there's plenty of programs that would allow a first-time buyer or even someone who's bought in the past to purchase a property with really little down payment. And along with, a combination of today's market, because today's market's changed so much, that we see seller contribution.
Absolutely.
Right? Mm-hmm. And so with that comes the ability to purchase a property with very limited out-of-pocket. And that's a cool thing compared to where we've been over the last 6 months, where we're going over asking price, paying closing costs, paying down payment, and that's a lot of money when it's hard to save money these days.
Right.
So that when it comes to programs, I would say there's plenty of options out there. You want to talk to a mortgage advisor, let them know what your goals are, so we can guide you in the right direction.
So we talked a little bit about VA, we talked a little bit about conventional. The one we really haven't touched too much on is FHA. And those are the 3 bullet points, right? For, first-time home buyers, people entering the market. I know we could get into all kinds of ARMs, bank statements, things like that. But the big 3 are the conventional VA and FHA. Pros and cons to the 3, real quickly, for them to just kind of break down what might work better for them.
Yes. So pros and cons. FHA, biggest thing is property improvement. FHA has a higher standard of property condition. The other is mortgage insurance. FHA has mortgage insurance that lasts throughout the duration of the loan. Going back to goals, if they plan to be in the property for a short period of time, then that really doesn't matter. So qualifications between FHA and conventional would really lie into where their monthly budget is. Like, is it better to go conventional or FHA based on the rates that are available, the credit rating? FHA is a little more, actually a lot more flexible when it comes to credit.
Right, more forgiving.
You can purchase a property FHA with a credit score as low as 580, where Conventional, you generally need like a 620.
Sure.
So there's some flexibilities there. FHA is a great first-time buyer program, and there's definitely different outlets that we can share to guide you in the right direction on which one to choose.
Okay, so first step, how do we get pre-qualified?
Yeah, so first step with us is you want to apply online. But before all that, I think preparation is important,
Sure.
right? So as a buyer purchasing for the first time, there's 3 things I would recommend they do. First thing would be to take a look at credit.
Sure.
Like Credit Karma, freecreditreport.com. See where that credit score is. 580 is the minimum credit score to qualify. However, the other thing you want to be aware of is your credit utilization. So what that means is if you have a credit card that has a high limit of $1,000, you want to keep that balance at least 30% of that, which is $300. The credit algorithms will love you for it. Your scores will improve, and higher credit, lower rate, lower mortgage insurance, better affordability. So pull your credit, take a look at it, make sure you don't have any late payments.
Yeah.
Late payments are a big no-no. It's unfortunate, but we have had some stories where you're in the process and there's a 30-day late payment and the score drops by 80 points.
Wow.
It's that important. So credit's important. Second thing to prepare would definitely be along the lines of DTI. Know your debt to income ratio. So here's what this looks like. Take 2 pay stubs, add up your gross income before your deductions. Multiply that by 48%, and whatever's left, what that number looks like, that is what the lender is going to use to qualify based on what's on your credit cards, car loans, and the future mortgage payment. That number is what we're going to use to qualify. So that's going to be the 48% rule. The last thing that you'll want to do when it comes to preparation would be a lot of preparation for that future mortgage payment. Mm-hmm. So if you're paying rent today, you're paying $1,500 a month, round it up to $2,000, save that extra $500 in a savings account. It's going to do 2 things: add savings for you over time, and the last thing is prepare you for that future mortgage payment. And a good rule of thumb on figuring out what that mortgage payment could look like is take that sales price, multiply it by 1%. So if you have $200,000, multiply by 1%, and that gives you a general idea of what a mortgage payment would be in today's market.
There you have it, San Antonio. I hope we answered all your questions. If you have more, please feel free to reach out to us. Jon Tober, thank you very much.
Oh, thank you.
San Antonio, we wish you the best. Have a blessed 2023, and we'll talk to you soon.